there is no standard, there is no IFRS 51, for example, that is going to discuss cryptocurrencies, which is a bit daunting because they have been with us for so many years. And still we need to kind of like apply different parts of different IFRS standards, and we need to bother with what standard to apply. And spoiler alert, there could be so many standards that could be tested with something that is called cryptocurrency. Why? Well, because you can hold crypto as treasury, like instead of gold, for example. Or you can have an ICO, initial coin offering, and you are going to offer tokens. Or you can offer tokens not for a share in your company, but rather for the future product. Or maybe there will be future discounts, or maybe you are going to pay your staff with those. So, cryptocurrencies can be tested in different ways. And for us to be able to actually answer the question correctly, we need to know the definitions. So, for example, imagine that you have a company and it has some cryptocurrency on the balance sheet, like some bitcoins. Now, what could be tested? Well, it could be tested whether it is an intangible asset, IAS 38, or whether it is inventory, IAS 2. And spoiler alert, of course, it cannot be a financial instrument, because financial instrument, a financial asset, is a contract between two parties. And with a cryptocurrency, you don't have the other party that is going to sign, that is going to commit to you for paying cash. You have cryptocurrency, let's say from some exchange, but it's not exactly like that. So, if we were to challenge whether it's an intangible asset or inventory, well, you would need to explain what is that the company is trying to do with it. So if it is holding it for trading, so it's a broker trader, then it would be inventory. And what does inventory mean? Oh, we are going to recognize it at cost. And then at each and every reporting period, we are going to make this obsolescence check. So we are going to compare it against net realizable value. So basically the fair value, the market price, less any commission that you have to pay. If it is an intangible asset, then it's going to be recognized at cost. And then you are going to amortize it. But usually cryptocurrencies have indefinite life. I would remind you, indefinite doesn't mean infinite. It means just we don't know, and there is no saying whether it's 5, 10 or 20 years. And in this case, we are not going to amortize it. We are going to test those bitcoins in our balance for impairment. Okay, and of course, if we're talking about, let's say, fair value when we need, we are going to say that, well, it would require some valuation technique. And you would need to explain that you need to take the high level of hierarchy, if it is possible, so level 1 over level 2 over level 3. Okay, then it could have been that the company is going to issue tokens and receive cash or cryptocurrency. And if we are going to issue tokens, we're going to get, let's say, cash, debit cash. The question is, what is credit? Credit can be revenue. Revenue would happen if you're going to satisfy the obligation as soon as you are going to issue it, or contract liability when there is going to be some right to goods to service, but it's going to take time for you to transfer control. So, for example, when you are going to sell tokens for someone to access your platform, it's going to be recognized using IFRS 15 revenue, and you will need to explain that this is the right to receive goods or services. Or it could be that the tokens that you're going to issue are going to give the right to some cash payment, which is determinable, like 10% of something, of some let's say 1 million of cash that you collected. And if it is an unavoidable obligation to pay cash, then it will be a liability. So you will need to challenge this interest part and this final redemption part if it says anything about unavoidable obligation to pay cash. Or it could be that it keeps some residual interest in the company, and then you would need to explain why it has to be recognized as equity. If there is just something that you sell and you don't have to satisfy any other obligation, then you would just record it as income as revenue. So you will need to basically test the definitions of those very lines. So you will need to know what is the definition of revenue. Or you will need to know what is the definition of financial liability. What is the definition of equity? Definitions are key for you passing SBR. And because it is so important, you need to make sure that you study those, because your questions about cryptocurrencies are never about cryptocurrencies. They are about other standards that you are supposed to know. And there could be some pre-sale. So there could be some pre-sale deposits before initial coin offering. And you would need to explain. So if it is refundable, then it would be liability. If it's not refundable, then you're going to say, what is that you're promising? So it could be contract liability. It could be some development versus promotion costs around tokens or platforms. So it could be tested as IS-38 development cost. So development cost will be capitalized only if the probability criteria of technical feasibility and so on are met. If not, we are going to expense those. And it could be, let's say, accepting cryptocurrency from customers. So we sold them our tables, chairs, whatever we are producing, and they're giving us cryptocurrency. So the recognition of revenue IFRS 15 is going to be unchanged, except for the transaction price is going to include the fair value of consideration that is received. And the problem in here is that the cryptocurrencies, are fluctuating in value. And also the problem in here is that it may be hard to determine the fair value of those cryptocurrencies. So most likely it's going to be tested in conjunction with IFRS 13 fair values. And finally, there could be some tokens to employees. So if these are awards for services and they're going to be settled in equity instruments based on some price of the share and so on, then we're going to apply IFRS 2. Or if it is a short-term bonus, let's say benefit like a bonus, or if it's a termination penalty or something like that, then we're going to apply IAS 19. So we need to make sure that we are distinguish between equity or equity indexed amount to be promised or something else. And you also might be tested on the disclosures, on the risk narratives, and so on. So you would need to explain that for, according to IFRS 13, you are going to explain the methods of the calculation. You would need to explain the hierarchy to put the numbers of what is the value of your estimates using level 1 hierarchy, 2 hierarchy, and 3 hierarchy. You would need to explain that risks such as liquidity, market, credit risk would need to be explained, and the numbers should be shown according to IFRS 7, which is financial instrument presentation, the standard that we're not tested very often, and so on. And of course, some incorrect calculations could be tested as part of ethical question, but I think it's going to be separate because, ethical question gives us lots of other marks, so most likely they are not going to be mixed in together. And that is how cryptocurrencies are tested, which are not really cryptocurrencies, which is just the testing of your proper understanding of definitions. And it is vital to know how SBR tests things, so make sure to listen to all of the podcasts with other standards, with other issues as well. And consider subscribing to my course where I also explain the logics of the event so that you could answer the question even if it is formulated in the way that you've never seen before. And I will see you next.